The United States dollar continued to edge higher against the Vietnamese Dong, with the USD VND exchange rate reaching 26,296.000 on July 3, 2026, representing a modest increase of 0.02% compared with the previous trading session. Although this daily movement appears relatively small, it reflects the gradual fluctuations that are common in the foreign exchange market, where even fractional percentage changes can provide important insights into investor sentiment, economic stability, monetary policy expectations, and international capital flows. Currency markets rarely move in a straight line, and each trading session contributes another piece to the broader picture of how investors view the relative strength of two economies. In the case of the Vietnamese Dong, the latest exchange rate suggests that the currency continues to experience a balance between domestic economic resilience and external pressures from global financial conditions. While the US dollar posted a slight gain on the day, the broader trend tells a more nuanced story. Over the past month, the Vietnamese Dong has actually strengthened by approximately 0.15% against the US dollar, indicating that despite day-to-day volatility, the currency has shown resilience and has been able to recover some ground. This monthly improvement may reflect confidence in Vietnam's economic fundamentals, continued export activity, stable foreign direct investment, and prudent monetary management by the country's financial authorities. At the same time, looking over a longer horizon reveals that the Dong remains approximately 0.44% weaker than it was 12 months ago, highlighting the persistent influence of global economic uncertainty, shifting interest rate expectations, and the ongoing strength of the US dollar in international markets. Such mixed performance demonstrates that currency valuation is rarely determined by a single factor. Instead, exchange rates evolve through the interaction of numerous economic variables, including inflation, trade balances, economic growth, capital inflows, foreign exchange reserves, central bank policies, geopolitical developments, and investor confidence. Vietnam's economy has continued to attract international attention because of its expanding manufacturing sector, growing export capacity, competitive labor market, and increasing role in global supply chains. These strengths have supported demand for the Vietnamese Dong over time, even as international financial markets have experienced periods of heightened volatility. Strong export performance also contributes to greater foreign currency earnings, which can help stabilize a country's exchange rate by increasing the supply of foreign exchange entering the domestic economy. Likewise, steady foreign direct investment has continued to play a significant role in Vietnam's economic expansion, bringing capital, technology, and employment opportunities that reinforce confidence in the country's long-term growth prospects. Nevertheless, the influence of the US dollar remains substantial across global financial markets. When investors seek safety during periods of uncertainty, the dollar frequently benefits from its status as the world's primary reserve currency, creating upward pressure against many emerging market currencies, including the Vietnamese Dong. Changes in expectations surrounding US monetary policy, particularly interest rate decisions, can also influence capital movements between developed and emerging economies. Higher U.S. interest rates often encourage investors to allocate more funds toward dollar-denominated assets, increasing demand for the dollar while placing pressure on other currencies. Conversely, expectations of lower U.S. interest rates can improve the attractiveness of emerging market currencies by encouraging capital to flow toward faster-growing economies. These international dynamics help explain why the Vietnamese Dong may strengthen over shorter periods, while remaining slightly weaker on an annual basis. Domestic monetary policy also plays a critical role in maintaining exchange rate stability. Vietnamese authorities have historically pursued a measured approach to currency management, seeking to balance export competitiveness with inflation control and financial stability. Rather than allowing excessive volatility, policymakers generally aim for gradual adjustments that reflect underlying economic conditions while avoiding sudden disruptions that could undermine business confidence or international trade. This strategy contributes to a relatively stable currency environment, which is particularly important for exporters, importers, multinational corporations, and foreign investors who depend on predictable exchange rate movements when planning commercial activities. The latest movement to 26,296.0000 therefore represents more than just a numerical change on a currency chart. It reflects the ongoing interaction between domestic economic performance and broader global financial developments. Investors continue to monitor inflation trends, economic growth figures, trade data, employment statistics, and central bank communications from both the United States and Vietnam in order to assess the likely direction of future exchange rate movements. While no single daily increase can determine a long-term trend, each data point contributes to market expectations regarding the relative strength of both currencies. As global markets continue to evolve, the Vietnamese Dong's performance will likely remain influenced by external conditions while benefiting from Vietnam's expanding industrial base, increasing international trade relationships, and continued efforts to maintain macroeconomic stability. The combination of a slight daily gain for the US dollar, a modest monthly appreciation of the Vietnamese Dong, and a relatively limited annual decline illustrates a currency that remains broadly stable despite an environment characterized by shifting monetary policies, evolving global trade patterns, and ongoing geopolitical uncertainty. For businesses engaged in international commerce, investors managing diversified portfolios, and policymakers overseeing economic development, these exchange rate movements provide valuable signals regarding market confidence and economic momentum. Although the latest daily increase in the USD VND exchange rate is modest, it serves as another reminder that foreign exchange markets continuously adjust to new information, reflecting the collective expectations of millions of participants worldwide. As Vietnam continues to strengthen its position within the global economy while maintaining disciplined macroeconomic policies, the Vietnamese Dong is expected to remain an important currency to watch, with future movements depending on both domestic economic performance and the broader direction of international financial markets.